None of VPM Partners, Bob Kendall, or any of its officers, directors, employees, other personnel, representatives, agents, or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPM Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPM Partners broadcasts, on its websites, or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPM Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.
Are you there?
Hello, everyone. We've got sound now, so trying to do an impromptu meeting here. As we told you, we were going to have a impromptu meeting if anything substantial happened. Well, that has happened. The final day of July here, and the market has collapsed. I talked about in commentary that we needed to stay over the 1964.10 area. Not a chance. It's well below that on the close here, so we're looking at a huge collapse in prices, and it happened around some events, and we'll talk about this in just a few minutes, but definitely a material change in the markets. I've been preaching for a while. We've been in a sideways range. This is the first real breakout of a range that I've seen for a while with the type of momentum that was generated. We'll go through the charts here in a few minutes. We want to do just a brief show today, probably try to get this done in 15 minutes or so you can watch it, get an update. We got a full hour show in the morning, so we'll hopefully be able to figure things out, right, Mitch?
That's right.
So the best that the rumors around the markets are a couple. One is that Argentina's default has affected everybody. All of a sudden, and I've talked about this in other broadcasts before, is the way the market works is everybody wakes up one day and go, when did this happen? Like it's a surprise. Well, Europe, now they're worried about European economy and all kinds of stuff. Janet Yellen had nothing to say. Maybe everybody's realizing when the fire hose gets turned off that maybe things are going to change. Who knows? It really, market sentiment doesn't always have to make sense when things change. They just have to happen. Going back, I was talking to somebody earlier, in 87 when the market rolled over, it was supposedly about the trade deficit, and the trade deficit had been growing. It wasn't that big a deal. Well, everybody woke up on a Friday morning and decided it was a big deal, and that's just how it works. And the market frenzy went on for the next about 2.5 days, and we actually saw from a Wednesday high to a Tuesday low a 40% drop in 3 full sessions of prices. So 2%, not so impressive from that standpoint, but certainly back in the day we were down 316 on the Dow Jones here on the close, and that back in the day I'm talking about was the 3600 index, maybe 32. That was a big number all of a sudden. That was like 10%. So we had 508, we had a bunch of stuff, but on this current sell-off that we're seeing, I'm going to go over to the charts real quick. Mitch, do you have anything that you were able to find out on what was there?
There was another ruling that came down about some banks and overdraft fees, but really this thing looks like it's related to Argentina. One thing that, just a little side note, it's sort of ironic, and I know you'll probably touch upon this, but people talk about diversification and how it's going to protect you in downturns. It's the domestic market that's down more than EFA or EEM or any of the other familiar faces on the international space today. So,
right. Yeah, as a matter of fact, I am going to talk about it. I'll go over to the charts right now and keep us both on screen here for a minute. If I can get us over there, see if it'll allow me to do that. Here we go. And looking at the chart, what I've got up here right now is the daily graph. And yesterday's opening, VPM daily model sold out of the S&P yesterday. You can see this exit long up here on the top of the screen. We got a signal yesterday, and I turned in the when we do commentary, I do it late at night. Mitch rereads and edits and hopefully fixes any kind of things that don't make any sense when I was writing.
Do my best.
Yeah, of course. And I remember wanting to mention that we did have a short-term exit on this, which really told me we're probably going to fall back in this trading range. But this has exceeded all bad expectations, if you will. The low of the day today was 1930.67. I'm going to go through some numbers live. We kind of decided to do this meeting about 30 minutes ago, and so we were trying to prep for the meeting. So there's some things here I'll do live when we start looking at some of the numbers here really quickly. But this breakdown, you'll see during the market thunder shows on Monday, I talked about these indicators. We're now minus 1.4 on PPM1. I'm going to get both of us off screen for a second so we can see this stuff. We're minus 1.4, minus 10.10, and minus 0.36. So what's happened here is the market's rolled over. Those are not downtrend numbers, but they are certainly indication of the weakness that came in today. A couple things I'm going to look at here is we're going to go into the hourly graph, and you can see I've got the VPM models here in TradeStation within the running the logic, and you'll see that there was an exit pretty much off of at the end of the session yesterday. It exited, so it came in flat. It doesn't have anything going on right now, but you can see this collapse in prices, and these numbers here on the intraday stuff, you have to add a number, so it's actually, you actually read over a decimal. It's 1.74. So this is a huge downtrend on an hourly basis. Typically what will happen, the chances for recovery tomorrow will be if we can stabilize, and I'll be looking, as I do my research tonight, I'll be looking for some of the support numbers. We're going to run a couple of things here right now to see what we come up with. But bottom line is, this is a significant breakdown. One of the things Mitch was just bringing up, I just go over here real quick. I've been talking about these international spreads, and here's the EFA. If you look on the screen here, you'll see that it's turned up sharply today. And I've been talking for weeks and weeks. When we get a turnaround, this is not quite the turnaround. The one day doesn't, a buddy may say one day doesn't make a trend. It could be a one-day wonder. We've certainly seen the markets rebound, but the way that this one broke today, the point at where it broke and the numbers that it broke was what makes it pretty significant here. And I'm just trying to find a couple numbers. Here they are. I believe this is them. Let's see if that, and actually I can bring them on screen here in a minute. But the bottom line is the U.S. market, as Mitch was just talking about, it's even more pronounced on EEM than it was. But we are out of these European indexes right now, right, Mitch?
Yeah, we're out of both EFA and EEM
on our global strategies.
Yep.
So two things happen. Even though we still own the domestic indices, we still have a pretty good chunk of cash in there, which is going to mute some of the declines today. We'll see what it looks like when the portfolios get rerun tonight. But then we can talk about this in the morning. Maybe make a note on that, Mitch, that we can discuss that. But these indices are at least made a turn. We've seen turns before that ended up failing, but and I don't know that I'm not ready to proclaim the end of the world here just yet. There are some things which I'm bringing up right now that we can look at. Get to the right page here. I'll come back on screen here just so I can talk about it. I hate having a talking screen, so at least you can see me talking. But if we turn this over and we go to the monthly graph, you're going to see that we closed. I'm going to try to blow this up so we can see this just a touch better. This is what's significant about today's action in particular, it's interesting because we closed at the bottom of the month. Yesterday, when the market closed, we were not even a full 3-day average range away from putting a new high up. This was coming into this morning's opening. We were closed at 70 yesterday? Exactly, I think it was 70, or was that 64? Anyway, the bottom line is we were within striking distance where all we had to do was close over 64.10. It would have been a positive trade for the month. All of a sudden we get a complete reversal. We made a new high this month. This has not happened for years, actually, and I'll show you what's happened. So this is probably the event that sets us at least into a corrective phase, and we'll see how this plays out into tomorrow's action. But it's very possible we're going to see some more corrective action. If you look at what the VPM database has been doing for the past, I think, 3 weeks, right, Mitch? It is that we've been net sellers for the last 3 weeks.
Correct.
And some of you have been worried about having cash, probably not that worried about it right now. It feels pretty good when you see days like today. Whether it follows through or not is another thing. But this is a monthly reversal bar. This was a real, at the end of the month, there's a couple things I always look at. I talk about the Friday closes, which is the weekly close, which helps to determine continuation patterns and other things on an intermediate basis. This is, as I've referred to it before, the super slow motion, and this is really pretty significant from the longer term trend. And when you see reversals like this, markets tend to end on a reversal. Since this was the end of the month, if we had one more day, last month's low, let me see what this was real quick here. Last month's low, I'm going to put it on the screen so we can all see it, was last month's low was, where is it? There it is, 1915.98. So we did not take that out, but we closed, reasonably close to it with a close at 1930.67 on the session. So it's going to be interesting. Good news is when we come in for the market thunder show in the morning, the new month, the first ticks for the new month will be in, and we'll immediately start to see what kind of effects this pattern is going to have on momentum and all of that. I've talked about for a while, and those of you that have been watching the show, you'll know this, but here is the numbers, and I'm going to put it back on the screen here after I take it off. But the PPM 1 now was at 152 just on Monday. It's now 136. PPM 2 is 147 and 1% on PPM 3. And I've been talking about this contraction. The first signs that the market is topping out, is going to consolidate, is when you get that contraction. So now PPM 1 is not moving as fast as 2, and it needs to get under 1% actually to be significant from a turning standpoint. But this is what it tells us, that these moving averages are going to start to converge. And as you can see in every point on chart, you get a conversion of everything that you start to see. You see these patterns start to converge, and then the market penetrates. And this is really probably most evident when we go here to I'll flop over to the daily graph here. We had that convergence. All three averages are almost the same, and then you see the breakout today below all three. And now it's just probably, if we close down again tomorrow, we could already be in the short-term trend phase on a daily. Could be negative as close as tomorrow. So when I do commentary tonight, I'll be talking about some of the numbers that are significant for the momentum and for the trend analysis, and then we'll cover this in detail in the morning. So what about some of the other things that could have happened today? We saw the 10-year actually spike up a bit here. Let me just see if I can get this up on screen here full. It spiked up, but then returned back down toward this thing. I've got to get this these models off here. They're pretty messing up the screen here a little bit. There we go. So you saw a spike today all the way up to the high of the session was 261, We ended up closing at 256. We were 244, 45 just a couple of days ago. This is a daily index. So rates started to shoot up. There was no flight to quality, and maybe what we're seeing is sort of the beginnings of maybe what we'll see here in the U.S. Someday we're going to wake up and realize that we can't pay off our deficit. And I was looking at right now, we are auctioning off the better part of $150 billion per week in new securities every week. I remember when I started in this business, we used to have these they call them quarterly refundings, and you would literally plan 3 months in advance, and maybe there were $50 or $60 billion, and that scared us back in the days when Reagan was spending all the money to bankrupt Russia's defense plan. And it was interesting from that standpoint that we're not seeing any kind of flow into the bonds or anything as some kind of safe haven. So you saw rates increase, market drop, even though we ended up not up a lot on the day. It did spike. There was more, everything. Basically what it tells you is they were selling everything. It wasn't just the stock market. So that's happened. How about our good friends over in GLD? Did we get any action there? GLD down 0.11%. So gold's not. There's nobody buying gold either. And it's interesting when you get into these kind of modes. And a lot of these things I'm looking at with you the first time is for today anyway. You start to see where's the money going, and it's not going to anything. It's just getting out, and this was a get out day. It looks like. So you got selling bonds, selling gold, selling all the assets were getting sold out, and those are never good days. I guess maybe you'd like to see the money go somewhere instead of underneath the mattress or whatever. So we're not sure what's going on there. So I think as far as what to expect tomorrow, let's go there. Is with this breakdown, I started to look at a couple of these numbers here. I'm going to bring this up full screen. And let's just do a couple of let's run some Fibonacci calculations here real quick off this run here, and let's just see what we can come up with. So we are 1927 is a 50% retracement of this decline. So like I said, 2 days ago we were close to making an all-time new high. Now we're 50% off the entire, 4-month rally, Mitch?
Yeah, for the better part of it.
Yeah, we're talking. Mitch runs a little program with the UPRO symbol, the leverage symbol, and he got a sell with this one.
Yesterday.
Yesterday's open was a sell. So that thing was, I saw, down like 6% or something today, 5.5, 6.
They're about 6%.
Yeah. So, and meanwhile, it made what, 17 on the last trade. So. And This S&P trade was only about 4.5%, and it came in pretty good. You can see here where my cursor is right now. It came in pretty good there. But so the Fibonacci, if 27 doesn't hold, then the magical numbers are going to be 1927 and 1905. I'll do a lot of in-depth research on this tonight. Write up some things in commentary, but definitely be ready in the morning from the standpoint of what's going on. And if you look at the intraday charts here, if we go up and put the 5-minute graph on, see if I can expand this out enough to get a decent perspective. I think the futures might give us a better view of this. But here's the 5-minute futures. We looked like we were going to get a bounce here coming in about noon. It looked like they were going to try to rally this thing back, and then it just failed, and there was a massive liquidation. So there was a lot of selling coming in. You have to realize with the international charts that we were talking about earlier is that the cash flow has been to the U.S. If Europe is starting to roll over, they're getting hammered. They're going to start selling some of their other stocks to take profits that they have. So it kind of pyramids off itself. The initial phases of a breakdown is, especially when you have a lot of foreign investment and there's been a lot of people playing that spread that I've been showing the other way. Otherwise, they are playing it from a viewpoint of long U.S., short Europe, and that's been working actually since 2009, with the exception of a few cases. But this may be a capitulation. A lot of times you see that last hour bailout that a lot of times will be overseas selling that's coming in. In the days of my trading floor experience, that's what we would see a lot of days when the market's really negative. They might open higher, but by the end of the day, there were just sellers everywhere. In this case, we opened lower, just stayed lower throughout the session. So I guess for a conclusion right now, we're fairly close to some significant support. Doesn't mean it has to hold because it's there. We're gonna have to see how other markets react and see how Europe does as before we come. So if we have a lead coming in, and don't forget, first thing in the morning prior to open, we got unemployment numbers coming out. So they didn't care about a 4% GDP. It was probably as bogus as the 2.9 down in the first quarter.
Right.
So, it's I don't know what everybody's looking at right now. Maybe it's Argentina. Maybe they're just finally realizing that maybe this thing has been overdone. As I've talked about on our previous broadcast, I thought we had a little higher numbers, but they really weren't that much. I mean, we're looking at 2130 area. We made it to that's the big number, but 2034 has been a target for a while, and we got to 1991 and change the other day, and maybe that was it. That might have been it. So we'll find out. But anyway, that's all we've got for you right now. Unless Mitch, you found anything while we're digging around?
No, yeah, not offhand. We'll have some stuff ready for tomorrow morning show. That's for sure.
Yeah, we just wanted to come up and talk about it. We said if there's anything material that happened, this was definitely material. We're looking at 1.8% decline on the futures here that I've got up, and on the S&P, we're looking at exactly 2%. Yep. So. That's a pretty ugly chart I've got on the screen right there. It's pretty much straight down. It's a waterfall. So waterfalls are only fun when you're short. And by the way, if you had the TradeStation logic, which were final steps, I keep saying that. I'm so hoping to have it done by tomorrow, but it's pretty close to having it ready. But it not only did it sell out, it reversed and went short for yesterday's open, so that ends up to be a pretty good trade as well. Anyway, we'll see you folks at the Market Thunder in the morning, same time, same station. I guess at morning for me and Mitch, I guess, but noon Eastern time tomorrow morning. So have a great day, and we'll talk to you all then. Thanks a lot.